please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Dipan Mehta and Ajay Srivastava join us on the phone line now. Dipan, hi, morning. It's a really tough morning of trade. Almost 1,000-point sell-off is what we saw on the mid-caps. What do you think the market is so worried about at the moment?
I think more than the long-term capital gains, the fear is sinking in that we will see a rise in interest rates. And what is happening just now is a process of compression of price-earning multiples. I think there is no threat to earnings. I think earnings trajectory remains intact. But where prior to a few weeks ago, before the budget, we were factoring in stable interest rates and therefore justifying higher PE multiples, I think that equation has turned around completely. And we are seeing that maybe equities may not be the best asset class. You may get decent returns in fixed income as well. And on the whole, I think companies, which have got debt on their books will have a pressure on interest rates and operating profit margins accordingly. So it's a compression of PE multiples underway.
Okay. Take your point. It's the risk-free return which is now becoming 8% and therefore becoming attractive.
Yesterday the point was being made that is equity is still the best asset class, which might be the case, but for today, of course, the thesis is at risk. Ajay, good morning. How much of this weakness is on account of LTCG provision and people selling off right now? And how much of this is just pure global in nature and the fact that the market had run up a lot?
No, I think more than the three things which have happened since the morning, I can tell you the investors. One is, of course, there is a spook up happening in the mid-cap because that's already started before the budget, nothing to do with the budget, has got just accelerated because people are not finding exit. If you see what's happening today, the volumes have just shrunk on the buy side completely. So you having a one-way market on the mid-cap side, and we all know, I think you all have been long enough to know that this is what happens when everybody wants to exit the mid-cap. So I think there is a bigger panic on the mid-cap side. We know for sure that huge margin calls have been made in the morning, which is leading to sell-off even in the mainline stocks. So I think the whole, you can ascribe to LTCG, you can ascribe to the huge revenue deficit shortfall, you can ascribe it to political uncertainty because a lot of people have got worried yesterday and today with the Rajasthan elections. So I think all in all, the potent mix was that the government is facing a bigger headwind. And the last point was, what people are saying today is, the true cost of demonetization is now coming to the fore, where government has no revenues to meet its political goals. And I think that's what is bothering most investors, saying, will this continue like this in this fashion? So I think it's sum in all, but what accelerated the whole issue is the mid-cap crisis. I think it should stabilize in a couple of hours. I don't think we should panic out. People who can hold on to the stocks, don't sell out at this point in time unless you can switch to something more interesting. But I think now in this market, apart from economic uncertainties, political issues will also come to the fore and become more relevant. We thought it will happen around June, July. It's happening now.
But that was still Rajasthan. It's a state that does swing. It's not Madhya Pradesh that the state that
but the swing is 20%, and if you extrapolate the data, you are looking at a completely reverse picture.
No, I agree, but I still think it's Rajasthan.
And still local, think it's Rajasthan. Bipoles are local factors, but still, the manner of defeat, I think, is something.
No, Ajay, like Dipan was telling us, now does fixed income become attractive, and therefore are there question marks on flows into equities?
See, it's not about, I don't think that's the way people are looking at least today, Lata, what we're speaking to investors. What they're saying is really, one, of course, is that the mutual fund inflows, which were guaranteed with the 10% distribution tax, a lot of retired people, a lot of people have put money in it. And, modern mutual fund had perfected the art. Every month, dividend used to come out. Tax-free, they didn't have to go to tax authorities. Now, suddenly, everyone will be sitting with tax authorities. So what's bothering people is that will these investment flows keep coming to mutual funds now that a large segment would go under a tax hammer compared to the earlier setup? It's not about paying tax. It's about just dealing with the tax authorities.
The pain of tax, yes.
That's all. That bothers people is this harassment of tax authorities. So I think there is some way, the lead that they must come back and give a reasonable relaxation to at least retired people, people under the limits, that 10% is being cut. You will not get a refund for 2 years.
Yeah, that's right.
So I think the big chunk problem is not coming from the LTCG, that's coming from the fact that the 10% distribution tax is hurting a lot of mutual fund investors.
I agree with you. I agree with you. I know a widow who's living off mutual fund, part of her earnings. And it's the pain of, that the mutual fund guy will cut the tax and give. which is going to hurt.
Well, for now, the selling pressure has been arrested, so that's a relief. Well, for now, the selling pressure has been arrested, so that's a relief for the bulls at least. So the Sensex is still down, but down about 500, and the mid caps were down 1,000. Now they're down about 720. Ajay, just a last question before we wrap up. The simplest phrase to make money, as they say, is buy the fear and sell the greed, right? Are you buying the fear right now?
That's why Sefi was on the call and I said, just hold on. I have bought bank nifties. I have gone longer in bank nifties. I have bought my favorite stocks, the gaming stocks. I have bought a lot of mainline stocks at this point of time. So while we were doing this, we were trying to create gap to see how much we can buy. Because I seriously believe that the transition to large cap investments in this Indian stock market is only going to accelerate in the next 12 months.
Okay.
And that flight to quality is only going to accelerate. It's not going to thaw. So yes, selling has gone down, but I think this will leave deep scars, Sonia, on investors. Today will leave deep scars. That exit was blocked. The problem, exit liquidity was blocked today for the first time they experienced in last 3 years.
Yeah, the quality stocks are recovering. For example, we just spoke about it, Tata Global. Just see the intraday chart of Tata Global.